Hello, my name is Jolene McDonald, and I work in the Customer Service Delivery Branch for the GSA Center for Charge Card Management. I hope that you are enjoying this year's GSA SmartPay forum so far. Welcome to Advanced Concepts in Purchase Card Management. I know that many of you have a lot of experience in the day-to-day operations of running a purchase card program and are often tasked with developing policies and operational guidance for your programs. Today, we have several key learning objectives to help you leverage best practices to strengthen your agency's overall purchase card program operation. Today, we will discuss purchase card program regulatory guidance and policies from a government-wide level, some best practices that agencies and organizations currently utilize to manage their purchase card programs, purchase card program innovation and ideas on how you can improve your program and take it to the next level, and resources to help you take the next steps. Finally, we'll have a question and answer time after the presentation via live chat. Also, please feel free to put any questions in the chat throughout the presentation, and I will do my best to respond to them in writing, even throughout the pre-recorded session. Now, let's get started. Running a purchase card program is not for the faint of heart. There are a lot of regulations and policies that provide guidance and requirements pertaining to running your purchase card program. We are going to have a quick overview of some of the key policies and regulations so that you have a good grasp on the type of information available as you navigate purchase card program management. Some key regulations and policies for the purchase card program are the Federal Acquisition Regulation, or FAR for short, the Treasury Financial Management Manual, or TFM, Public Law 112-194, also called the Government Charge Card Abuse Prevention Act of 2012, and OMB Circular A123 Appendix B. FAR Subpart 2.101 outlines various thresholds for the micro-purchase threshold. These thresholds are important to learn and outline for your cardholders so that they are aware of their authority and limitations depending on the situation. In general, the micro-purchase threshold is $10,000. However, as you can see on the above chart, there are several exceptions, including varying micro-purchase thresholds for things like construction, services not subject to the Service Contract Labor Standards, or SCLS, supplies or services from the institutions of higher education, and purchases in support of contingency operations both within and outside of the United States. It is important to note that although the general micro-purchase threshold is currently set at $10,000, it is up to your agency to determine the various limits on purchase cards. For instance, you may prefer to have all cardholders without contracting authority set to a limit of $10,000, or you may choose to have a tiered approach by providing a group of cardholders with a $10,000 limit and lower limits on other groups of cardholders based on their purchasing activity or types of purchases that they make. FAR Subpart 13.201B and 13.301 focus on specific acquisition regulations surrounding the use of the purchase card. The FAR states that the purchase card should be the preferred method to purchase and pay for micro-purchases. The purchase card is a much more efficient and streamlined payment instrument compared to traditional payment methods. In addition, and one thing that many agencies don't realize, the FAR states that agencies should encourage the use of purchase cards by contracting officers to place orders and make payments under contractual instruments, including but not limited to contracts established under FAR Part 8 procedures such as GSA schedules contracts. One of the most underutilized areas for purchase cards is making contract payments. Agencies have a major opportunity to increase the purchase card spend and therefore increase refunds by leveraging this FAR section and exploring more ways to make contract payments via the purchase card. The next purchase card regulation that I want to discuss is the Treasury Financial Manual. Chapter 4500 of the TFM discusses purchase card procedures for departments and federal entities. Like the FAR, the TFM states that agencies should not limit the use of purchase cards to micro-purchases. In fact, the TFM states that when agencies develop policies and procedures, those policies should encourage the use of purchase cards by contracting officers in greater dollar amounts than the micro-purchase threshold. In addition, The TFM discusses various items that an agency should include and outlines in their purchase card program procedures. It also goes into detail about refund management and the statutory authority surrounding how an agency is allowed to accept refunds, and that refunds should go back to the appropriation or account where the purchase was made. It is important to note, however, that some agencies have statutory authority that allows for the refunds to go back to other areas. When writing agency policies regarding refunds, you should ensure that you review all statutory authorities in case your agency has an exception to this general rule. In 2012, Congress enacted the Government Charge Card Abuse and Prevention Act. This public law outlined many of the policies and procedures provided in OMB Circular A123 Appendix B in a more formal document. The public law outlines several key areas of management of purchase card programs. First, it discusses required safeguards and internal controls that should be included in your agency's policies. It is important for policies to discuss how to establish and maintain purchase card accounts, including how to set up single transaction or overall purchase limits. As we discussed earlier, this may include outlining various roles and micro-purchase levels within your purchase card program. Another area discussed in the public law is outlining reconciliation, certification, and record retention requirements for purchase card holders. Third, agencies should have policies in place discussing the need to review purchases utilizing the data mining tools provided by banks and brands within the GSA SmartPay 3 master contract. Agency policy outlining data mining procedures and guidelines assists in preventing erroneous and improper or illegal purchases. Purchase card managers should utilize data mining tools to flag and review suspect transactions or purchases. Finally, the public law outlines refund validation and training requirements. Purchase card managers and purchase card holders must take training a minimum of every 3 years. Agency policy, however, may require more frequent training. The public law also outlines important refund validation requirements. Agencies are responsible for validating the quarterly refunds provided by the bank. Your bank should provide refund reports and refund guides that give you the appropriate tools to be able to adequately validate refunds received. Another key area addressed by the public law is penalties for violations. As discussed in the last slide, your agency policy should outline procedures for reviewing purchases to flag illegal, improper, or erroneous purchases. This section of the public law discusses the next step in policy development: what to do if you find these types of purchases during the review process. When developing agency policy, it is important to outline the appropriate punishments for adverse personnel actions, including employee dismissal procedures as necessary. All executive agencies with greater than $10 million in purchase card spend must provide a semi-annual report on violations to OMB by the agency's Inspector General that includes a description of any illegal or improper purchases and the personnel action taken for each violation. The last key area outlined in the public law is risk assessments and audits. The public law requires IGs to conduct periodic reviews of purchase card programs to identify or analyze potential risks. It is important to include procedures and guidance on how to address audits for purchase card managers and cardholders. This may include the type of information that they must provide to the IG, specific reports, specific documentation requirements, and timeframes for working with the IG. IGs may review specific transaction information to look for things like spend patterns, and may also review agency guidance and policy to determine if there is a need to include other procedures to lower risk or encourage an increase in spend through the program. IGs are required to report their findings and any implementation of updated procedures back to the head of the agency and OMB. The final piece of guidance that we will discuss is OMB Circular A123 Appendix B. The circular provides agencies with a framework to best manage their charge card programs. Although we are discussing the circular in terms of the purchase card program, it is also applicable to other business lines, including travel and fleet. The circular is a more detailed document that aligns with Public Law 112-194 and covers various topics such as internal controls, training, performance metrics and reporting, and refund management. The OMB circular outlines several areas of internal controls that agencies should address when making policy decisions. They are the application process. Understanding the process flow of applications from completion of the online application through the review and approval, and understanding the delegation of authority, meaning what level of authority or credit limit does a cardholder have? If it is an AO or AOPC, how many cardholders will they oversee? Training, ensuring that applicants take the appropriate training for their delegation. For example, an AOPC should take AOPC training at a minimum, but some agencies may require them to also take cardholder training. Next is the transaction process. Your policy should outline the dispute process for cardholders so that they are aware of how to file a dispute and the timeframes involved in filing a dispute. It should also outline what constitutes an improper transaction and the potential punishment for violations. Third, the review and approval process. Policy should outline how a cardholder reconciles transactions, how they maintain documentation to show valid transactions, and the approval process for your approving officials. Agency policy should include reconciliation timeframes to ensure that cardholders are reconciling properly. Finally, the charge card management process. Policy should spell out a clear separation of duties, how to handle delinquencies, span of control, and invoicing approvals and payment processes. For example, a cardholder should not be their own approving official. Approving officials should not have an unreasonable amount of cardholders under their purview to ensure adequate checks and balances. Delinquency timeframes should be provided to cardholders and approving officials to ensure that payments are made in a timely manner. Not only can late payment affect refunds, but it also affects the agency by triggering a requirement for prompt payment interest after 30 days. In addition, if an account is delinquent for too long, the account can be suspended or canceled in accordance with the GSA SmartPay 3 master contract. Another key area outlined in the circular is training. As discussed previously, card managers and cardholders must take training a minimum of every 3 years. Many agencies have additional training requirements. The training can be taken through the GSA SmartPay training website, which has purchase cardholder and AOPC training modules, agency-specific training sites, or a combination thereof. The training should cover a variety of topics, which may vary somewhat depending on the role of the individual, for example, a cardholder, AO, or AOPC, such as card management functions, the electronic access system, and how to utilize data analytics tools and reporting to maximize program oversight and efficiencies. A third area outlined in the circular is performance metrics and reporting. Previous versions of the circular contained a large amount of agency quarterly, semi-annual, and annual reporting requirements. After review, OMB streamlined a large amount of the reporting to focus on the key areas of the GSA SmartPay program. The current OMB circular requires annual statistic and narrative reporting. GSA CCCM has taken the role of maintaining and reporting on behalf of the agencies. Annual statistical reports include items such as the number of purchase accounts and the total purchase spend amount for the year. Annual narrative reports include items such as a description of agencies' best practices and information on delinquency monitoring practices. Agencies provide required supplemental information for these reports directly to GSA CCCM, and the final report information is provided to OMB on behalf of the agencies. The final area covered by the circular is refund management. Your agency policy and procedures should provide guidance on ensuring on-time payments to avoid delinquency and additional prompt payment interest, as well as provide strategies on how to maximize refunds through increased spend or more timely payments. One of the most important things for agencies to review when looking at refunds is their task order pricing document and how their pricing is established. These pricing agreements should be reviewed at least annually prior to option extensions and prior to task order recompetes. There are several valuable tools that are out there to assist with reviewing and validating refunds, including refund review guides, quarterly review reports, refund review tools, and the GSA SmartPay Data Warehouse dashboard. Now we are going to go over some best practices and audit findings in the Management of Purchase Card Program as found in OMB Circular A123 Appendix B, as well as tips and tricks from some of your peers. First, maximize use of reports and bank and brand tools. Under the GSA SmartPay 3 master contracts, there are numerous mandatory reports available at the agency level. They are listed in section C.7.3.1 of the master contract. Reports such as delinquency report, fraud analytics report, invoice status report, and transaction dispute report, among others. Ad hoc reports are also available, and if you don't know how to pull your own queries and have yet to receive training, contact your Level 1 AOPC for information on how to schedule training. Next, leverage purchasing power using category strategic solutions that permit the use of charge card as ordering and payment solutions. The federal government spends billions of dollars each year through purchase card programs, as well as other contract mechanisms, and each transaction has the potential to increase the sourcing power of the government. Purchase program managers should be aware of any agency-specific requirements to ensure compliance with strategic sourcing. Often, these contracts or ordering vehicles can include the use of the purchase card to streamline the acquisition process and add further value through the generation of refunds. Third, institute internal management controls to mitigate risk of misuse or delinquency. You can implement strict internal controls that mitigate charge card risk to the greatest extent possible, perform periodic reviews of spending and transaction limits to ensure appropriateness, conduct internal charge card program reviews on a regular basis to ensure internal control mechanisms are adequate, monitor reports to identify potential split purchases, perform periodic reviews of the number of charge card accounts in use for appropriateness of number, as well as evaluating the span of control for approving officials, and keep current on new and innovative solutions to detect and identify potential fraud, misuse, and delinquency. The next item is initiate administrative or disciplinary actions for card misuse, abuse, and repeated account delinquency. Agencies must otherwise comply with all applicable law and regulatory guidance in determining whether to impose disciplinary or adverse action in any specific case. You should initiate verbal counseling and warning, provide written warning, suspend or revoke charge card privileges, suspend or revoke employee security clearances, include misuse or delinquency occurrence in employee performance evaluations, suspend or terminate employment, ensure consistent enforcement of penalties, and publish actions taken by the agency for misuse of charge cards. Finally, you can learn from others by reviewing audit reports and findings. At our website, we maintain a repository of audit reports related to charge card programs. You can review the audits to assist with policy determinations. There are several internal controls that can and should be instituted to mitigate risk as part of a normal program management. You should assign duties separated by individual. Are the duties at your organization separated out for authorizing, approving, and recording transactions, receiving assets, approving statements, making payments, certifying funds, and reviews or audits when possible? Next, the appointment process for cardholders and approving officials. Do you have a process for card application, issuing appointment letters to cardholders and AOs to define roles and responsibilities and adequate recurring training? Next, span of control. Is the number of cardholders assigned to each AO reasonable? Is the number of cardholders and AOs assigned to an AOPC reasonable based on the volume of spend and organizational structure? Next, transaction approval process. Is there a policy in place about how purchases are approved? Are they approved prior to the purchase? And if so, by whom? Should the approval always be in writing? Is there a desired required format that lists the specific information that must be included? Finally, you should look at reconciliation and delinquency controls. Are you using the canned reports available? Has your agency worked with your bank for customized alerts? Are statements being reviewed promptly? What is your audit process and how often do you audit? OMB Circular A123 Appendix B, Section 2.4, Purchase Card Internal Controls, talks to specifics of having such questions and more answered as part of an agency policy for the charge card program. Now that we have gone over some high-level regulatory and policy information, as well as high-level best practices, let's dive into some specific common examples of policy considerations for your agency. These examples may come up often in the course of running your purchase card program. Our first policy consideration is training purchases. The Government Employee Training Act, or GETA, gives each federal agency general authority for employee training. The law says that the head of any agency may pay or reimburse an employee for all or part of the necessary expenses of the training, including, among expenses, the necessary costs of tuition, library and laboratory services, or purchases or rentals of books, materials, and supplies. Based on this site, agencies may choose to make a determination that training, education, and professional development, when authorized on the agency's training authorization form, is not a FAR-based transaction, and the micro-purchase threshold for services does not apply to these types of transactions. DoD, for example, uses the purchase card to purchase training authorized by use of a single SF-182 to a cap of $25,000 per transaction. The policy for using the purchase card for training varies by agency. Along with the dollar value of the proposed transaction, other considerations must be made. First, has your agency made a determination about the classification of various training transactions as FAR-based transactions or not? Second, how is the purchase card being used? As a procurement mechanism on the open market, ordering mechanism against an existing contract, or a payment mechanism to pay for training acquired by other means, such as a contract or purchase order? Third, what type of training is being purchased? An individual slot in an existing course for course or import to the agency, tailored training, or a subscription for training access. Training can be procured through government and non-government sources. Training from non-government sources must be for regularly scheduled commercial off-the-shelf courses, training conferences, or instruction, available to the general public, and priced the same for everyone in the same category, such as the price per student. While some agencies allow the purchase of tailored training up to the micro-purchase threshold, others require that any tailored training must be procured by a warranted contracting officer. Typically, tailored training requires a detailed statement of work and reviews by parties such as the agency's training office, human resources, or other professionals. Agencies should review policies related to training, including human resource, employee development, and procurement regulations in conjunction with any specific agency purchase card policy. If the agency determines that training is not a FAR-based transaction, the micro-purchase threshold would not apply, and the purchase card may be used up to the lesser of either the single purchase limit of the cardholder or any training purchase threshold set by the agency. If the training is a FAR-based transaction, the purchase card can be used up to $10,000 in accordance with agency policy. Your agency's policy should address various types of training purchases, such as individual training for an existing course, existing commercial off-the-shelf training, tailored training, and subscriptions for training access. It is important to note that when purchasing individual slots in existing courses, each slot may be considered its own transaction, even when paid together, as allowed under agency policy. Our second agency policy consideration is long-term rental or lease of land or buildings. Per GSA SmartPay 3 Master Contract, Section 8.14.1, the contractor shall have a mechanism to further restrict the use of a purchase account for the purchase or acquisition of long-term rentals or lease of land or buildings. Long-term is defined as any rental agreement or lease that extends beyond a 12-month period and is intended for more than a temporary basis. In the case of long-term rentals or lease of land or buildings, The purchase account may only be used as a payment mechanism within the account holder's authorized purchase limits, consideration of recurring payments limitations, and considering agency-specific policy. Agency policy best practice example 3 is conference space purchases. From time to time, your agency may want to rent out conference space for things like training or large meetings. Unlike our previous example, rental of conference space is considered a short-term rental or lease agreement, meaning the agreement is in a place for less than 12 months. Purchase accounts may be used as a purchase and payment mechanism in the case of short-term rentals or leases, defined as those rentals or leases with a duration of less than 12 months. Within account holder authorized purchase limits and after consideration of agency-specific policy. Examples of appropriate uses of purchase accounts for rental agreements of lease of land or buildings include the purchase or payment of a conference facility to house a 5-day conference or meeting where a travel CBA would not be appropriate, and the purchase or payment of office space to house an agency for 3 months during the response to a natural disaster or act of terrorism. Another topic of discussion that agencies bring to our office frequently is toll payments. Toll payment policy is greatly debated among agencies. Agency policy dictates if purchase cards can be used to charge per toll or replenish funds. Accounts must be in the name of the agency, not a person. Agencies must give consideration to the advance payment statute when establishing toll payment policies and guidance. In addition, agencies should consider the following. First, individually paid tolls. Individual tolls are considered an on-demand requirement, meaning that each demand going through a toll booth, for example, is unrelated to the demands before and after, such as other tolls and other locations. Each toll is therefore an individual requirement or transaction. Next, establishing a prepaid toll account. These accounts are considered prepaid because the account automatically replenishes funds using charges against the purchase card. It is up to individual agency policy if they will allow cardholders to establish prepaid accounts with their purchase card and under what circumstances, to establish controls for use, and how such charges will be reconciled. With prepaid accounts, there is typically a monthly recurring charge of tolls that have been debited to bring the account back to the required minimum dollar amount. The limits on recurring payments apply in this case and can impact the use of the card in this manner. Agency policy dictates if purchase cards can be used to secure government accounts for toll systems that require a card on file to charge either per toll or to replenish funds. Also, in the case of easy passes and other accounts where cards are kept on file for the purpose of replenishment of toll funds, the advance payment statute must be considered. This statute says, a payment under a contract to provide a service or delivery, an article for the United States government, may not be more than the value of the service already provided or the article already delivered. This means if you haven't already received the good or service, you can't pay for it in advance. However, there are industries where advance payment is a stipulation to receive services such as tolls, and each agency must develop policy in these areas as part of its agency's purchase card program management and oversight. For example, the DOI includes a policy on use of the purchase card to pay for toll passes or transponders in their policy with circumstances for use. It is important to note that agencies should utilize the GSA SmartPay travel card, not the purchase card, for the payment of tolls while on TDY. Our next policy example is utilization of a purchase card to pay for parking passes and fees. Similar to tolls, if an agency secures parking pass accounts that are paid on a recurring basis, such as monthly parking passes, they should be in the name of the agency, not an individual. Similar to toll passes, agency policy dictates if purchase cards can be used to secure government accounts for parking fees that require a card on file to charge per instance of parking use. Policy example number 6 is subway tokens and Metro fare cards. Offices may use the purchase card to purchase subway tokens, tickets, and Metro fare cards for general use when employees commute across large metropolitan areas as part of their normal job duties, such as to attend meetings, hearings, or other mission-related activities. Fare cards should not be assigned to individuals, but checked out and returned to a controller. These items are considered as cash equivalents and should be secured as such. The Center for Charge Card Management frequently receives inquiries from customer agencies on the use of third-party payment processors. Third-party payment processors, such as PayPal or Square, offer e-commerce or internet payment solutions for commercial transactions. The processors own merchant accounts that allow them to accept and process charge card orders on behalf of other companies. Many merchants choose to utilize third-party payment processors in order to accept payments without having to establish a merchant account through a bank. Some merchants find that this is a more cost-effective option, especially if they do not process enough transactions to establish their own merchant account to accept charge cards. Merchants pay third-party processors a transaction fee for these services rather than processing transactions through a merchant bank. Transactions using third-party payment processors are considered to be high-risk transactions, particularly those made to unknown or unusual merchants, and alternative methods of payment should always be considered. However, if a merchant is well-known or there is prior purchase history with the merchant, third-party payment methods can be safe. Cardholders should still ensure any processing terms and conditions remain advantageous to the government. It is important to note that this policy does not apply to merchants either online or brick and mortar stores who process cardholder transactions directly with a credit card processor such as MasterCard or Visa. This exemption includes programs such as the GSA Commercial Platform Program. When deciding the appropriate use of third-party payment platforms, agencies should instruct cardholders to take into consideration the following issues. First, the account establishment requirements. In some instances, the cardholder may be required to establish an account in order to make a purchase through a third-party payment processor. The individual may be asked to provide detailed information and also to agree to commercial terms and conditions provided by the processor. Cardholders are prohibited to establish accounts and agree to commercial terms and conditions without consent from their legal counsel. Cardholders that agree to commercial terms and conditions without proper authority or approval may be in violation of the Anti-Deficiency Act. Second, account verification limits. In some instances, third-party payment processors require account verification after a certain dollar threshold has been reached during an established period of time, such as 1 month or 1 year. These limits vary depending on the third-party payment processor. The third-party payment processor will not process payments above that threshold until the cardholder provides the payment processor with a bank account number to verify that the cardholder is the actual owner of the card. This feature is in place to help prevent and detect fraud. However, GSA SmartPay government charge cards are not linked to commercial or individual bank accounts. Therefore, it is impossible for cardholders to provide this information. This could result in a limitation on cardholders' abilities to make timely purchases, or the cardholder may be asked to create a business account which does not require bank account information, but may have fees associated with it. It is important that cardholders be aware which accounts may or may not be created and that they have proper authority to create an account. Third, disputes. It is possible that the dispute process may vary from the contractually required dispute process within the master contract for third-party payment processors. Cardholders should be trained and aware of the dispute process for the GSA SmartPay program before considering making purchases under a third-party payment processor. Fourth, merchant name. While truncation of merchant name is happening less and less with third-party payment systems, it is still something for cardholders to consider when using these tools. The truncated merchant name may create difficulty for reporting, reconciliation, and oversight purposes. Finally, data. There is often less Level 2 and Level 3 transactional data available when utilizing a third-party payment processor. The cardholder may only receive the merchant name and dollar amount of the transaction when making a purchase with a third-party payment processor. Another area of policy interest is the e-Marketplace platform purchase. An e-Marketplace is an online platform where companies can register as a buyer or seller to conduct business-to-business transactions. Examples of these types of platforms include the GSA Commercial Platform and Amazon Business. The GSA Commercial Platform contains 3 vendors. They are Amazon Business, Fisher Scientific, and Overstock Government. This platform was established based on a 2018 NDAA Section 846 requirement. There are several key benefits for agencies to consider utilizing these platforms, including automatic tax exemption when making purchases, business pricing and quantity discounts, the ability to restrict by purchase card bins, and the ability to highlight certain types of purchases such as Ability One or small business set-asides. It is important for your agency to review certain policies before implementing an e-Marketplace program. First, you need to ensure that your policy includes information explaining that cardholders are restricted from utilizing their personal cards, email addresses, and home addresses when making purchases for your agency via the platform. Second, it is important to remind cardholders that they still need to follow purchase card and contract payment regulations, such as following FAR required sources of supply, micro purchase threshold requirements, and their own spending or single transaction limitations. In addition, purchases through the platform still have normal documentation requirements similar to any other type of point of sale or electronic purchase. Third, your agency should establish top-down workflows and approval processes. These processes should already be in place, but it is important to utilize them with e-Marketplace purchases as well. Finally, one of the biggest benefits of the e-Marketplace is that you can utilize tools to analyze purchase patterns. For example, you can analyze purchase patterns through Amazon using Amazon Analytics. Policy example number 9 is use of the purchase card by cost-reimbursement contractors. Did you know that 40 U.S.C. Section 501 and FAR Part 51 allow for cost reimbursement contractors to utilize the purchase card? There are several policy considerations that an agency should take when determining the use of the purchase card in this area. First, the agency should ensure that a substantial dollar portion is cost reimbursement in nature. Second, a contracting officer must provide a letter authorizing the contractor to utilize GSA sources of supply. Third, you should understand that contractors have different regulatory requirements than federal employees. For example, contractors are not bound by FAR requirements or appropriations law requirements. It is important to take that into consideration when developing policies for a contractor purchase card program. In addition to those basic considerations, agencies may also want to consider the following when writing policy. Establish a separate hierarchy for tracking so you can clearly separate when utilizing reports. Consider having different sets of MCC controls. Contractor controls may be more restrictive or allow codes not normally allowed, depending on the specific mission and needs of the contractor. Last, it is also important to note that even though the purchase card is a CBA, in this instance, the contractor is liable, as opposed to the federal government, for any non-payment issues or delinquencies. The government gets the benefit of still receiving refunds on the purchase card. Instead of going back to the initial appropriation, they go back directly to the contractor's site of performance. Another item that is often discussed in purchase card management policy decisions is surcharges. Surcharges are fees that a retailer chooses to add to the cost of a purchase when a customer uses a charge card or credit card product. It is important to note that surcharges must not exceed negotiated network fees for merchants, or 4% in any state, and that if a merchant charges a fee, they must post a notice of the charge and list it as a separate line item on the receipt. It is also important to note that not all states allow surcharges. so agencies should do their due diligence to determine which states do and do not allow them. When developing agency policy, you should make cardholders aware that they may encounter surcharges from merchants. Remind them that the surcharge should be announced by the merchant and should be a separate line item. Also, ensure that the cardholder verifies that it is allowable in the state where they make the purchase. Finally, you may want to consider including policy to require or recommend that the cardholder considers another merchant that does not apply a surcharge to avoid the fees if possible. Policy consideration number 11 is end user license agreements, terms of service, or other similar legal instruments or agreements. FAR subpart 13.202, unenforceability of unauthorized obligations in micropurchases, addresses the government's liability when a cardholder signs contractor terms and conditions as part of a micropurchase. FAR 13.202 states that many supplies or services, such as information technology acquisitions, are acquired subject to supplier license agreements. Many of these agreements contain indemnification clauses that are inconsistent with federal law and unenforceable, but which could create a violation of the Anti-Deficiency Act if agreed to by the government. The clause at 52.232-39, unenforceability of unauthorized obligations, automatically applies to any micropurchase, including those made with the government-wide purchase card. This clause prevents such violations of the Anti-Deficiency Act. This means that if a cardholder signs vendor terms and conditions in the form of a EULA, TOS, or other instrument which includes terms that are inconsistent with other federal laws or implied elsewhere, are not accepted by the government. The clause states that indemnification of the vendor or any person or entity by the government in terms of damages, costs, fees, or other loss or liability that would create an Anti-Deficiency Act violation is unenforceable against the government, and that no government end user shall be deemed to have agreed to such a clause by virtue of appearing in a EULA, TOS, or other similar legal instrument if the agreement is invoked through a click on I agree box or other comparable mechanism. FAR was updated in 2013 to add this protection because trying to negotiate these indemnification clauses out of vendor license agreements on a per purchase basis would take months to accomplish and many times result in finding the most agreeable vendor to the change, not necessarily the best price or product. Agencies should develop policies around the processes to be used when using the government purchase card as the procurement mechanism and the vendor requires a EULA, TOS, or other similar agreement with the government. Our final policy example is emergency purchase card use. It is important that your agency has well thought out policies in this area so you are prepared for potential emergency situations and procedures. Agencies should review emergency and disaster response guidance, such as the Stafford Act and the FAR, to understand how to shape your purchase card policies and use during an emergency or disaster situation. It is important that you develop specific agency policy on this issue to include information to charge card managers such as AOs and AOPCs, as well as cardholders, including both those with and without contracting authority. AOPCs, AOs, and other charge card program managers should be prepared for emergency, disaster, and contingency operations for all program business lines. Emergency use of the government charge card program has a number of management responsibilities related to card usage, including developing, maintaining, and updating agency-specific policies and procedures for use of charge cards or other payment solutions during an emergency or disaster situation, working with the contractor bank to establish procedures and processes to implement during emergencies, and educating and training cardholders on proper card use, applicable policies and regulations, and fraud prevention strategies during emergencies. Purchase card program managers have a lot of important roles to ensure adequate and efficient responses during an emergency or disaster situation. Card managers should complete general preparations and communications with cardholders for emergencies, disasters, and contingencies so that the cardholders are aware and prepared for their roles and responsibilities. Agency policy should ensure that card managers identify and maintain a list of individual cardholders who may become active in an emergency, disaster, or contingency situation, such as first responders, volunteers, and contracting officers. These individuals should be aware of any increased cardholder authorities that will need to be implemented during an emergency. For example, a cardholder with micro purchase authority may have their single purchase limits increased based on special FAR micro purchase authorities for emergency situations. Cardholders with contracting authority may also have different purchasing, contracting, and documentation procedures based on additional contract flexibilities in these instances. Policy should also account for continuing to closely monitor transactions throughout the emergency or disaster situation. Due to increased authorities and more flexible purchasing situations and scenarios, it is especially important to closely monitor for misuse and fraud. Monitoring may look different during these situations due to the increased authorities and limits, so it is important for card managers to be acutely aware of the changes in process during this time. For example, transactions that are flagged in the contractor's electronic access system may be okay due to increased authorities during this time. Or managers may have to make tough choices to allow merchants to force transactions when they normally would not allow that to happen. As you can see, it is extremely important that purchase card managers and cardholders are properly trained so that they are aware of these increased flexibilities. Finally, agency charge card program managers should consider all available product and service offerings provided by their contractor bank to determine whether there might be a product or service that would assist the agency in purchasing efficiencies and security during an emergency, disaster, or contingency operation. When developing policy, you can review the GSA SmartPay 3 master contract product and service offerings for possible solutions that may be valuable, and work with your contractor bank on getting more information and implementing solutions. One agency best practice that may be extremely helpful is to develop a cardholder deployment kit for cardholders that will be on site during the emergency. Include things like copies of policies, agency POC information, disaster response vendor information, local area information such as maps, and paper purchase logs. This gives the cardholders useful tools and reminders of how to purchase throughout the emergency. After the emergency is over, AOPCs should continue to review transactions to ensure they are proper and have followed all applicable emergency procedures, return per transaction and monthly transaction limits to prior normal levels. Where applicable, deactivate accounts of employees who will no longer be using the card. This includes working with contractor bank to immediately deactivate any issued short-term accounts that were set up under emergency response procedures. And finally, review and get feedback on processes, develop best practices, and update any internal agency policies as necessary. Now that we have discussed numerous specific policy examples and best practices for your purchase card program, let's get into a couple of other important areas of consideration for successfully managing a purchase card program. One area of the master contract that is especially of importance for purchase card program oversight is the area of data mining and case management. The GSA SmartPay 3 master contract contains many data mining and case management requirements for the contractors to provide tools to assist your agency with finding and analyzing potential fraud, waste, and misuse. The first type of tools that are offered is fraud and analytics tools. The GSA SmartPay contractor banks provide internally or via the brands fraud analytic tools that use real-time data and random data signatures that are tracked within all data repositories to monitor data packets. If an unauthorized packet is detected, it will trigger an auto-severing program to prevent data breach. These tools also analyze transactions and test each transaction against specific rules established by agencies. The system identifies and reports all non-compliant transactions. At an aggregate level, An analysis of all completed transactions against all new transactions can be made to detect patterns of potential fraud and then flag non-compliant transactions when potential fraud is detected. The second type of tools offered are case management tools. The GSA SmartPay contractor banks provide internally or via the brands case management tools integrated with the contractor bank's electronic access system that enable high volume automated processing of cases, leveraging data mining, fraud analytics, and risk determination. Data is seamlessly integrated from the contractor bank's data mining and fraud analytics solutions. If your agency is not taking advantage of these types of offerings provided by the contractor bank, I highly recommend that you reach out to get more information about your bank's offerings and how to implement them into your purchase card program oversight. Finally, no advanced program oversight presentation would be complete without mentioning audits. Many of you deal with purchase card program audits on a regular or recurring basis. One of the key ingredients to a successful purchase card program is ensuring that you have all of the policies and tools in place to have successful audits. The GSA SmartPay program is a highly visible program, and Public Law 112-194 outlines many requirements for audits of this program. Although audits can be a heavy lift for many program managers, they are important to ensure that agencies are in compliance with policies that are working diligently to detect and deal with fraud and misuse. One best practice is to conduct your own annual reviews to get ahead of any potential future audits. This way, you will be prepared when it is time to respond to audits of your program. Our program's website has several audit resources available for your agency's use. These resources include a sample annual review checklist and summary of findings document that you can leverage to put annual reviews in place for your agency, as well as the GSA SmartPay audit repository, which includes examples of audits previously completed on various card programs within the federal government. It is important that you utilize and leverage these important resources so that you are prepared. When looking through audit reports, regardless of the agency and fiscal year, there is a pattern of findings that exists. Learning from these patterns provides direction on what areas to target in your annual review of your program management controls, purchase card policies and guides, refresher training, and other training materials for cardholders, and in your day-to-day management of the program. First, strengthen systematic oversight and internal controls to include regular reviews of hierarchies, maintaining account status, internal audits of purchase card transactions, files, or logs, identification of split purchases, patterns of potential misuse, non-compliance with policy, and categories of high-risk purchases and appropriate disciplinary action when misuse and abuse are found, such as suspending cardholders or approving officials who fail to take training or are repeat offenders. Second, strengthen documentation to support purchases. Ensure written authority and a description of the product or service purchases is present. Obtain proof of purchase, such as receipts or invoices, and proof the government received supply purchases, such as a third-party receipt. Third, educate approving officials on what to look for in the review of a transaction on the cardholder statement and provide regular training as a refresher. Fourth, educate cardholders about what constitutes an improper purchase, that sales tax must be removed at the time of purchase, and also to rotate vendors when making repetitive purchases. The best way to learn is from the mistakes of others. Using those mistakes to poke holes in your own policies, procedures, and training to make sure they are airtight is a great way to keep your program running in top shape and sustain any audit scrutiny. This slide contains some helpful resources that you can utilize to learn more about the GSA SmartPay program policies and guidance. We hope you find them helpful as you manage your purchase card program. Thank you so much for attending the presentation. If you have any questions or need any additional information, please do not hesitate to contact us. I have provided my personal email address as well as the general GSA SmartPay address. Thank you for attending this session. I hope you enjoy the remainder of the forum.